Hello, everyone. Welcome back to the RationalInvestor.co's Daily Brief. It's Monday morning. We're back in the saddle, ready to rock and roll. Hope you guys had yourself a great weekend. Looks like we're live on YouTube. So nice to see Tom's over there. Alex, nice to see you. Joe Waldman, good morning. So we've got our resident picnic basket raider with us this morning too. So we're going to be working towards sort of a little bit more of a consistent routine. Hey, Bobo, nice to see you, bud. I'm looking at your picture right as you speak. Terrible teeth, though, man. Jesus. But great picture nonetheless. But anyway, sorry, got off topic there. Going to be working with Thomas, and actually we are looking to sort of hire a show producer. If anything, I got to start off by saying I threw the invite out there, and I just got absolutely overwhelmed with responses and applications. So, Thomas, if anything's kind of cooling me down, going, whoa, we got to define this job a little bit better. So, and I also actually, discarded one person who applied out of the blue, and I didn't even think twice about it, but I completely insulted him, and it's just been weighing on me all weekend long. So please, guys, Brian loves to put his foot in his mouth every once in a while. It's nothing personal. I love all of you guys, each and individually. You're just the best, and if I insult you with anything, I just sort of say flippantly, just go, oh, fuck Brian, smarten up, because I don't mean to insult anybody here, but we just got an absolute dearth of applications, and so Thomas and I are slowly working through both the interview process and what this job's going to look like, etc. So please be patient with us. We're working on this new website. All the boys are all working away diligently. It is coming along. Our site designer, the guy who actually made the cute little logos and stuff that you see, girl, she just got married, so she's off on a honeymoon right now. It's incredible actually to watch this whole sort of organism of TRI evolving here. So lots of moving parts. Try and stay patient with us. We try every single day of the week, and including on broiler chicken shows, to give you guys value and justify your monthly membership. Of course, people that are in the school, it's great to see the feedback from the current level oneers. They are overwhelmed, and that's exactly what should happen. Good part about it is market's relatively calm right now, so we get them all up to speed, rocking and rolling. And once we sort of get the bull sort of gets back in charge here, we can attack everybody full bore with trading plans and setups and all that. So that's just a quick sort of hello. Welcome back. We're back in the saddle Monday to Friday. You can see on our breadth indicator, we were, interestingly enough, the breadth of the market actually broke down in January. So what a shock. Stock market is finally sort of cleaning itself up. And if anything, what we should understand here from this data is usually the major indexes are actually the last thing to break. So this is a really great anecdote of the fact that the market and most of the market actually was breaking down through January. And it's only at the very end of the breakdown, as everything's just shitting its pants, that the major indexes actually start to break too. And also too, we were kind of talking about this recently as well. I really like the fact that finally, for all you crypto enthusiasts, finally we're getting to the point where the market's getting washed out, right? And you can see on the medium-term basis. For bulls and for traders, don't think investors, because the investors, they're just getting destroyed right now. But for traders, this is exactly what you want to see, is you want to see the market completely washed out. And then we can start thinking about hitting the reset button and starting the next bull. So this has been a really, really good exercise for everybody on this site to simply watch as these things have gone. And I remember back in October, November, December, these were sitting at egregiously high levels, and I was like, oh, Jesus. And then through sort of the turn of the year, this went back to sort of zero level, kind of like a neutral reading. And now we're finally getting sort of that capitulation, washout. They're just throwing the baby out with the bathwater. Whew, finally. And actually, it was interesting on like Twitter this morning. I actually put out a note just simply saying, and I think I did it yesterday, just simply saying, man, it's been so fucking long since I've been able to actually tout bullish setups on Bitcoin. I've kind of forgotten what it's like. So I was pleased, and we'll have Thomas talk a little bit more about this in a bit. But I was pleased myself to see that we're starting to get at least, there's no guarantees in this business, but at least finally we're getting to the point where we can actually start making bullish setup charts. And it's interesting how the market is really trying to decide whether we're going to accept this previous horizontal support and resistance level, which was a pretty powerful level. CME traders, they all had big exit cues on these dumps and stuff. And I also see, too, that the sort of sentiment in the space is changing as well. So a little bit of a reprieve here. When we, and everybody, I won't pull it up now because everybody's totally familiar with it. But when we look at the cycle guys, they were also looking for this counter trend rally here. So it looks like we're finally getting a bit of that counter trend rally kind of action in the market. So finally, at least, for the short term, my personal thinking is, they've washed the market out. The damage has been done. The key here now, of course, is not to freak out and panic and dump at the lows. And if anything, we have to see now, okay, what is their plan for sort of cleaning this market up? So with that said, that's sort of Brian's thoughts right at the moment. Thomas, you want to take the ball and sort of tell us what's on your mind this morning?
Yeah. Hey, everyone. Good morning. Hope everyone had a great weekend. Not thinking about the stock market, maybe a little bit about Bitcoin and crypto. Get a chance to fill in some orders. But before we jump into crypto,
Do you
I
want
want to.
to be looking at any particular chart while you're chatting away? Because I think Thomas wants to take a quick move at the stock market here to start.
Yeah. If you don't mind just bringing up a Dow, S&P, dollar, oil, and gold, that's what I'll be touching on. That's in the spreadsheet if you want to follow that. So,
Okay, so, and remember everybody, old dog, new tricks. It's going to take me a little while to get comfortable with playing this new game here, so bear with me. So spreadsheet, we won't show the spreadsheet, but I just want to see where Thomas is heading. Okay, so did you have like a chart link or something you want me to look at, or do you just want me to pull up a new chart?
You could just bring up the Dow. We don't really actually have to touch the S&P. The dollar, oil, and gold are the only ones that I'm going to cover today. And we won't spend too much time talking about that before we go into crypto, because that's really the main event for today. But
Okay, so there's your Dow, and you said you wanted to look at the dollar. Because keep in mind, everybody, TradingView doesn't update the dollar index here in real time. This will be the end of day data, but nonetheless, we should be able to have a conversation about that. There is your gold, and here is the crude.
Perfect.
Okay, where do we go first?
So if you don't mind drawing a fib on the Dow and see where we've kind of rebound to. I wanted
What are we measuring off of the lows as the Dow? Do we want to go all the way back to? And what's so cool, everybody, is Thomas and I were sitting in the lounge when this bottom came in, and all of our data said this fucking market's going up here. Isn't that incredible? Do you remember that?
Yeah, that was the play of the last 2 years.
Pretty much, yeah. So do we want to measure our fib off of those lows?
Yeah, let's use that. And then I also want to do the most recent range that's coming in here as well. So
heading back up top?
Yeah, just from that low to the top. And let's see where 38.2 and the 50% levels are.
All right. And of course, TradingView always loves to do this. Let's go maybe 400. All right. Something like that. Well, that didn't work. Let's try that again. Oh,
yeah, so we took off
50,000.
Friday. Friday was kind of the end of the real panic day. This on Friday when we had the daily brief was when all the information about the volatility trade that was busted came out. The stock market started sharply selling off. We were down at one point, I think, down 500 points.
Hey, did you see Kramer was getting all frustrated at your waitress girl for VIX trade?
Yeah, Kramer was touching on that on Monday. But after we sold off 500 points, people were starting to wonder why is the bond bond market continuing to sell off with stocks. Now, historically, whenever someone wants to hedge their portfolio, you want to have a mix of stocks and bonds, because when stocks go down, what's supposed to happen, everyone?
Well, theoretically, bonds should go up as sort of if stocks come off, then that means that growth theoretically is in question, which leads the bond investors to believe that inflation isn't as big of a concern. So bond prices should go up as interest rates come off. And actually,
Brian
it's really
answered
cool for the level oneers. They're going to be learning this idea of correlation with stocks and bonds shortly.
Yeah, so this is a big deal because bonds should not sell off with the stock market, and this really left a lot of people confused. So
Yeah.
we're gonna get into the
Every once
dollar.
in a while,
Yeah.
sorry, I don't mean to interrupt, but every once in a while, and this is a really good lesson for all sort of new people to the site, new people to trading. Every once in a while, you get a situation where bond prices and stocks move in the same direction. You can see the inverse correlation here. Stocks going up, grow, 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 bonds heading down, fear, fear, fear of inflation. And then after a while, the stocks actually go, oh, geez, this is getting serious. And there's an old line in the market that says that as soon as how does it go? And this is important, right? Because this is, you'll learn this, for years to come down the road. As soon as this stock market starts worrying about bond prices heading down, then we've got problems. As long as this inverse correlation, and you can basically see the inverse correlation working here. As soon as stock investors start going, holy Jesus, these bond prices keep falling and interest rates keep going up, then at some point the stocks will say, okay, whoa, okay, wait a minute, we gotta cool our jets. And if anything, you can kind of see the volatility coming back into the bond prices here as the stocks are coming off. And all things good in the world, we should, if the stock market has indeed topped, we should see these bonds bottom. But I don't think we're done here yet. That's the irony of it all. All right, I didn't mean to interrupt. Sorry about that. Actually, I did mean to interrupt. That was terribly rude of me. Go ahead, sir.
That was I'm glad you overlaid that chart. That was important to see. So on Friday, I highlighted that 24,000 was the key bearish level that we need to close under in order for this week to see, further declines into the beginning of the week. And we didn't see that. And here we are on Monday. We're kind of headed back up, but there's a little gap that was created on Friday where we rallied from down 500 to up almost 500 points. And
interesting. Can everybody see the empire here? Bum, 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 right? They fired here, but interesting how they left a little bit of an island top here. See that island right there? So I think there's probably unfinished business on the Dow right through there.
Yeah, there's a lot of concerning things happening here. And the biggest one, again, is that the bonds are selling off with stocks. So that just implies that we're not in a healthy market. And if anything, it implies that we're in a new market state. And we're seeing that with the other correlations that have historically been working together with the dollar, and the dollar against gold and oil against gold. And if we look at the dollar chart, we saw the dollar start to not really form a bottom, but sort of bounce. So before we take off from the Dow chart, you can kind of see Brian's pointing a picture down to the 26 level.
So there's your 38.2. There's 50%. And notice this cheeky little gap right there. You see that? So I'm wondering, and it'll be predicated on whether we can recapture this island top here. But if that can't be recaptured, and it looks to me like the stock market just simply wants to come back and against this base here and fill in that gap there, right?
Yeah.
Sorry,
so my
model
showing that the volatility index is going to spike toward the end of the week. So if anybody wants to start thinking this is advanced, so anyone that's level 3 or above, or if anyone wants to dip their toes and paper trade it, and we can cover this later on, maybe tomorrow, is that there might be an options play in the VIX where you can buy calls where you expect volatility index to go up. And if that happens and we see a sharp sell-off, you'll profit handsomely from that. But that's a trade that's very advanced. And
VIX is probably still pretty high though, eh?
yeah, it's 27 right now, which historically for the last year and a half, it was between 10 and 17 at the most. And that's why this trade was broken for the inverse volatility index, which was one of the retail products that was being sold.
Right. So interesting. The bottom in the Dow was this action right in here on your VIX. Everybody can see the base. And, you know, guys, this is such a great, you know, all the level oneers. And of course, anybody who's taken the damn course, right, previously. When you see the VIX down here, just this is complacency. You know, W's, right? You think geez, the premiums on these options must be through the roof here now, though, eh?
They're not as bad as you'd think.
Oh, okay, that's cool.
Because everyone was so short that the premium isn't through the roof yet, because all the other trades are being unwound and people were caught so off guard that that amount of money couldn't shift into the call side as quickly as everyone would like. And that's kind of what we're seeing with the unwinding of those retail products, is that a lot of people lost a lot of money last week, and nobody wants to be playing this. Because I mean, for instance, Fidelity on Friday banned all their customers from playing any VIX related products. No one's allowed to touch them until they say so. So this is a really
that waitress, man. That waitress got everybody into a lot of trouble, didn't she?
Right.
Okay. So where do you want us to go next here, sir?
Let's just touch, you know, we can just look at a dollar chart real quickly and see that we're heading back upward because the dollar has been functioning as the risk on proxy in this event the last week. And typically whenever people don't know where to put their money, they're going to put it into either the dollar and eventually gold. But right now we're seeing money being parked into the dollar. And
yeah, I mean, the simple rule is in times of fear, you are going to run into the thing that you are most confident in. Now, I understand crypto people, you're not really that confident in central bankers and the system. That makes complete sense to me. But we have to think about, you know, Mr. Wall Street dude, Mr. Chicago dude, Mr. You know, Frankfurt dude, right? Isn't that where all the money's traded in Germany and Frankfurt? Anyway, when in fear, you run into the most safe, secure place and you go and buy their short-term paper. In fact, the video that somebody was circulating on the site, there was a gentleman, I think it was Mike. Mike's just such a fountain of information for you guys. I mean, me too. And he was, where the hell's that damn link? Too many screens. My head's going to blow up. It's one of these pages. Oh, here it is over here. This guy here. And this guy here, you listen to him. He's like, this is the guy, you know, if you haven't watched this, I would highly encourage you do watch this. This is the kind of dude, this is like your typical Wall Street dude, right? This is, he's like Mr. Pro. And he was just basically even saying in this show, I'm just going to run and sit in the 2-year treasury bond and collect the coupon. And I'm just going to wait for all this shit in the market to unwind. So if you can understand that thinking, then it makes sense why the US dollar index goes up when risk on bets, stock market, commodities, Bitcoin, when they start to come into question, all the money managers just go and say, fuck it, just go and grab that US 2-year paper. I'll collect the coupon and we'll just ride this shit out. And, you know, 2-year bonds, they track pretty closely to short-term interest rates. So as a result, their price fluctuations really isn't that bad. So that's sort of why the US dollar index goes up in times of fear. Great. Sorry. Didn't mean to interrupt again. I did.
So let's go and look at gold. So historically, whenever you compare the dollar and gold, they have an inverse relationship. So whenever the dollar goes up, gold's going to go down. And whenever the dollar goes down, gold's going to go up. So in this case, we're seeing gold kind of going down with the dollar rallying. And now gold's recovering a little bit and going back up. It seems to me like gold's moving in consortium with the stock market, which doesn't make any sense because
Oh, yeah, it does. Yeah, it does. Because remember, gold is our inflation proxy. So if the stock market's booming and the stock market was booming there, inflation big comes in, money comes out of the US dollar index, comes out of those treasuries and stuff and into stocks, into euro, right? And I don't know whether we watched that macroeconomic voices stuff, and guys, and that other guy, I just showed you his video. Did you see the Italian retail sales number actually came in negative year over year now? So they're actually experiencing negative growth in Europe, and they're all shitting their pants about Europe. So it makes sense that money's going into the dollar out of euro. It'd be really cool to do like a euro gold comparison to see if they're moving in lockstep. But in essence, I think that this is that dollar index rallying. Gold's coming off. Gold, historically, it will move up as sort of inflation fears build. And of course, if the stocks and risk on assets are coming off, then gold should come off. I think this makes sense to me, Thomas. And remember also too, guys, this is not a being updated, right? This is thanks to TradingView. This is an end of day print. So what we'll probably find if you see gold's catching a bid here today, the end of day print here on the US dollar index is probably going to be a down. Sorry, I interrupted again. Jeez, I'm bad at this today.
The dollar's sitting around 90.28, so it's actually not that far away from where your chart's showing.
Oh, that's good. Okay. I'm not quite sure why. Maybe, you know what, it might be the dollar futures or something. I don't know why TradingView doesn't want to. Yeah, see, they only print the end of day. So you can see on Friday it was a up bid. So and really that makes sense. I mean, is the stock market booming higher here? We have an up day. So if anything, and gold's catching a bid here, I think it makes sense that the dollar index itself is going to be soft. And if anything, if this is for real, U.S. Stock market catches a bid, we put in this bottom and we start surging back up top, which is totally possible. I could see the dollar come off, and I could see gold, rally back up top. If anything, do you see this M in crude? Wow, what a nasty top that is.
Yeah, I mean, there's just the only thing that I'd like to mention is that gold, you do need to keep an eye on this relationship with gold because it's getting a little bit wonky. So keep that in mind. We did want to mention crude. Crude did put in a top and is rolling over. That trade, if you wanted to go short, I think you kind of missed the boat there. You have to wait for it to move higher before you want to think about entering on the short side again.
Yeah, what do you think the odds are that this is good old Kevin's Kavarkinator level just sitting there? I bet it is.
Yeah, that looks really cool.
Look at that, eh? So, and this is where all the stuff that we teach in this course, like the classic markets, this stuff really works. With the venture cap and the crypto space being as volatile and as heavily manipulatable as it is, we often see levels are breached just because they're so illiquid. But gee whiz, that is what I call a top. And if we just draw some simple trend lines, just connect the dots, it looks to me like the crude market's going to want to try get back up here, right? And then we'll find out whether this thing's for real. So absolutely, Thomas, if you are short inclined of crude, you've missed the trade. Do not take this trade here.
Isn't it interesting how oil and gold have moved down together?
Yeah, and I would argue too that there's a big, if anything, what's interesting here is I used to always say that gold and oil can't move in conjunction. But I think what's happened here, and this is exactly what we just saw in Bitcoin, is that we headed into a very important cycle peak here. And if all things equal, if Bitcoin didn't exist, this market should be looking like the Bitcoin chart. But because Bitcoin's eaten a whole shitload of this guy's lunch, he's underperformed. So interestingly enough, I think, the ironically enough, the biggest losers of the Bitcoin story is the gold people. That's the irony in my eyes. Anyway. All right, where do we go next?
Let's move on to our favorite. So I think Brian knows which segment we want to move on to next. What do you call that one?
Bitcoin tastes great. So
That's it.
All right, and I have to. All right, where is the spreadsheet? Where am I supposed to go to next? So we talked stocks and bonds selling off at the same time.
And yeah, let's move to Bitcoin. And let's keep in mind that on Valentine's Day, this Wednesday, February 14th, we've got the CBOE contract winding down and closing at, I believe it's 4 p.m. Eastern.
Oh, interesting. I actually put out today the COT report from last week. So this should be really interesting to see the changes in this report. And I also asked too, I'm a little pissed off because I got a funny feeling we're getting played here. But they're reporting the CBOE contract. Where the fuck is the CME data? So I got a funny feeling the crypto community is getting played here by these guys. So, you know, it'll be really interesting to see the changes here. I did notice, you know, just in this last report, we see that, you know, of the reportables, the longs are building relative to the shorts, so that's good. We still don't have any commercial interest in this space. That's bad. But I do see that this relationship is tightening up here a little bit. But I also don't like the fact that retail is still massively long over short. But we should get a new report distributed tomorrow. So it'll be really interesting to see how this data plays out. And then Thomas tells us that we have a contract expiry coming up. We should also be aware, too, that we have Chinese New Year is coming to an end. So we may see them come back to the market. And then also, too, our cycle guys were suggesting a counter trend rally. So I can kind of feel that counter trend rally is coming back. And actually, it was interesting. Thomas was chatting with one of his buddies, and they were talking Elliott Wave. And do you want to talk Elliott Wave here?
Yeah, so we were musing before the daily brief here about seeing the third wave, which was the largest degree of movement, and that's historically what you see with Elliott Wave, and that's where we just made the most recent low. Now, the most recent low has a tail in it, and the guy I was chatting with likes to use Elliott Wave a lot, and he thinks that that's our third out of fifth wave, and the fourth wave is going to bring us up to maybe the $1,000 or so higher area. And then the fifth wave is.
I sure hope maybe 10,000.
Did I say 10? Did I say 1,000? I meant 10,000. Yeah, sorry guys. That would probably all give you a heart attack.
I'm just playing with you.
Yeah, so we could see a move up into the 10,000 or so, maybe 11,000 area, and you know that's I don't know what level he's looking at, but we can kind of draw reload zones. And we can hypothesize based on that area. But the most important takeaway is that Elliott Wave, based on his count, and Brian and I were reminding each other that you have to make sure if you're doing Elliott Wave that you understand first what market you're looking at, the state of the market, the A, B, C movements that Brian's highlighting on his screen, and also what we would eventually see here is this fourth wave higher would inevitably lead to a fifth wave much lower, and it looks like that would paint us in the anywhere from the $4,000 to $6,000 range is what the guy I was chatting with said. So
yeah, if any, you know, we looked at our cycle chart. I won't go and find it for you. You know, the Foundation of Cycle guys. They were suggesting that we should have a bit of a counter trend rally here. We've got the Chinese New Year finally coming to an end, so in the next few days we'll see them come on. We've got the CBOE contract. Those guys are probably all going to want to just, you know, basically book profits on their shorts. So maybe we'll see some position squaring there. And then ultimately after this sort of counter trend rally develops, and we look at the charts. I guess I'm thinking, big fat round number, $10,000. I think is a pretty important psychological level. You can see this trend line here. That'll take us up, 10,000, 11,000 area. We're starting to see some positive signs out of momentum indicators. Me personally, for this to actually been really a solid bottom, I would have much rather seen a nice solid W here. But hey, we just got to live with what we got. So long and short of it here, this made a cute little inverted head and shoulders, which we often see on the RSI. Keep in mind, too, I like to follow a very fast RSI. But I do like the fact that they're trying to put in a W here, trying to break it out through the midpoint 50 line. We'll know that this sort of rally, this counter trend rally is for real if we can print above here and then, of course, recapture the 50 line. So we're still on the fence here a little bit. Could we roll over and come down, do some more work below the 50 line through this area? Sure, totally realistic. And as I had sort of pointed out earlier, and I had sort of tweeted, this is the first time in a while that I've actually been able to start thinking about hunting bots and stuff like that on the long side. So my bot level here on this OKCoin forwards is 86.30. I like to have 3 lows. I got 1, I got 2. I wouldn't mind getting another solid low, especially against this nice railroad track bottom. If I could get a nice solid low print down in here, nice signs of reversal, I might just think about seriously strapping on this bot setup here to take us up into this 11,000 area. Little concerned that maybe we went a little too far too fast, just zing, 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 and we're cleaning up this right now. So I don't think I'm quite ready to just pound the table. We got to load up. I still think there has to be a little bit more cleanup here, but long and short of it here is this is the first time in a long time I've actually been thinking positively here, well, a couple months really. And you can see on OKCoin forwards, that would take us up to 11,000. Again, that sort of idea of playing with the 10,000 level. And if we look at the profile, you guys have heard me talk about this before. Profile wants to look like a parabola. You can see just off of this price action, there's the POC, there's the bottom of value. So, if the profile does look like parabola, you can see that we could do quite a bit of business up here, and that would be perfectly natural for the market. So it's encouraging. It's nice to see. I don't know whether I'm quite at the ready to go, this is the bottom, this is it. I think this is more just sort of back and forth trade action. And also something that Thomas and I were chatting about just before we started is, thinking about his buddy Elliott Wave kind of idea. Did notice, and this probably isn't the best chart to use. I thought I had another one that I did up. But where the hell is it? Oh, darn. Bitcoin likes to pivot in the middle of the summer. Here's a really good example from 2016. You can see the ultimate low. They put in a low here, then the dead cat bounce away, and then ultimately the bottom, right? And I've been sort of counseling all of you guys that I think they're going to put the ultimate bottom sometime in through the spring. And that would sort of correspond with that sort of Elliott Wave kind of thinking you can see here, that they put the bottom in right in through, the spring, late summer here. This happens to be end of May, beginning of June. So it's not an accident. They like to bottom Bitcoin through that late spring period and sometimes into the summer. So let's, be cognizant of the fact that that's probably what they're thinking is, hey, here is May right in here. I don't think we go this deep, but I wouldn't be surprised. And then also, too, sort of reiterating that Elliott Wave kind of thinking, if we do the count, usually the third wave, for you to know that Elliott Wave is for real, is the wave 1 to wave 2 will be relatively small. Let's maybe do a different color here. Let's go, we'll go purple. So you can, well, I want a color that you can see, the orange. All right, so 1 to 2, and the key here for you to know, and I think this is what Thomas's buddy saw to sort of confirm the Elliott Wave, is 1 to 2. well, 1 to 2, 2 to 3 is usually the biggest wave. So if we go back to our Elliott wave kind of thinking, you see 2 to 3, 2 to 3, and in this case, this would be a bigger one, 2 to 3. Usually that's the biggest wave. And actually, we know that Elliott wave is for real if when we have this counter trend rally, we get wave. So this is 1, 2, 3. 3 to 4 should take us back up, you know, like we said, up against highs, play with 10,000, big psychological level. And then 4 to 5 is smaller than this wave. And the size of this, the being it's smaller, it will actually create a divergence. And that's sort of your classic tell that, yep, this is Elliott wave and we're ready to rock and roll. So it's interesting how we just go boobity boo, boobity boo. You know, maybe we come down to something like there. There's that 3,000, 4,000 area. Good old Ian, he's probably watching that 88.6 like a hawk. And that would complete that Elliott wave kind of process. So,
yeah. And I really like that. If that were to come true, it kind of fits our narrative here with most markets where you need to suck people back in. And that's what's happening right now is people are like, oh, look at that. Bitcoin's rallying again. We got to start buying. We got to get in on it. And the higher it goes from this area, the more people are going to be like, oh my God, I don't want to miss the boat. I need to get back in this. It's going to go to 55,000. It's going to go to 110. I watched a YouTube video where the guy said it was going to be $1 million in 2 years.
Yeah.
I mean, it just feeds the hype and people start FOMOing really hard. They start buying it. And that's kind of what fuels us higher into this $10,000 to $12,000 range. And once you get enough people in, then it's just a normal market cycle. But what happens is you complete the rest of this wave and the rest of the market cycle, and you go lower and you start to sell off slowly, slowly. People start to get nervous. It goes lower. They start selling, goes lower. More and more people start to sell. And then you have what's called the capitulation event, where everyone thinks that this thing is just going to roll over and die. And you need to get your money out or you'll get zero by the end of the day. And once you start seeing people say, I'm never doing crypto, and we were talking about this in January, once you start seeing people on Twitter, your friends, your family saying, I told you so, this thing's going to zero, and then people are like, you know what, maybe they were right. I'm going to go and get the job back.
Did you see the tweet that I put out right here? There was, it was so, I mean, it was just so cliche. And you never know when you're right in the middle of it. You never know. But yeah, seriously, right on this goddamn candle right here, somebody had put out on Twitter. I thought it was just so funny. I mean, you just joke about it, right? Because they can't make investment decisions based on this. But somebody literally posted out, Mom called me up and said, I got to get out. Right? I can sell everything. And I was like, all in. It was like literally you couldn't write better fiction than reality. It was just perfect. Anyway, somewhere back in all this mess. So, you know, on balance, I think our general message, here it is right here, all in. So that was February 6th, right? Mom calls up and says, yeah, Mom, if you got any Bitcoins, you better sell them now. Right? Mm-hmm. So, you know, let's just go look on the chart. What date was that, right? And gee whiz, there is February 6th. It was basically the day of the low. Isn't that hilarious? That's just absolutely incredible. Anyway, something that I noticed, and I've highlighted Thomas's chart, and because to me this screams volumes. We have a claw developing here, and if price can accept back into the claw, then the claw will basically dominate it. And you can see, interestingly enough, the top of the upper part of the claw is sitting right at Mr. Kavarkanator. And the bottom of the claw is sitting basically right at about 38.2. So and it's interesting, look at the battle that we're having right now on Thomas's chart, right at this lower POC. And really, quite literally, if the market can accept back into this claw, then I think it's a no-brainer. We're heading back up to that 78.6, right? And gee whiz, right in the middle of the claw is the most important level, that big psychological boundary, big psychological magnet. You guys are going to have to learn this over time if you don't know it now. Markets love to oscillate around big, fat, round numbers. And I don't think there's a bigger, fatter, rounder number than 10,000 bananas. So I can see everything all sort of playing out here. It's not really a shock. The only problem here is this sustainable, right? And you can see on Thomas's chart, this looks very much like a V. It does not look like a W. If this was the bottom, right, we would actually want to go down into that reload zone on Thomas's chart, test that low, and then turn around and head back up. If we got that over the next few days, then I'd be like, all right, this is a serious bottom. But right now, all I can really say is this is a V bottom. We're bouncing off of it. If we accept back into value and accept back into the claw, then I think that the dead cat bounce. In fact, I can see AB equals CDs on Thomas's chart even now. And that looks like it's going to take us up to 11 and change on his chart. All right. Anything else you wanted to add here, sir?
Yeah, I like that. I think we do need to accept over this neckline with the blue that I've drawn up here at 91.50 or so, or, that's kind of where we need to break out to get trapped in this claw area. And right now, the 4-hour isn't really supporting that. We're kind of almost fractaling here. And then you've got some momentum issues coming in where momentum's making lower highs and price isn't really doing anything. I don't like this yet. Willie's not quite overbought, so we could see a lot more volume coming in and then momentum just rocket higher. I think we need to see something happen for that first. My indicator's not ready to roll over yet either. There's probably a little bit more sideways before we can really jump into that claw area.
Well, also too, I think this speaks to the COT data that's going to be distributed tomorrow. And we often say, who can, let's say over on YouTube, we'll do a quiz. How do we say this? Through which kill zone does the market pivot 70 to 80% of the time? Everybody on the site should know this. No? Oh, Mike, excellent. Good job. Oh, very good, Bobo. Right? So you guys know this. Good. And Justin, write that down. So 70 to 80% of the time, the market likes to pivot through the Tuesday, Wednesday London kill zones. And it's usually a function of the dissemination of the COT reports. And then, of course, there's usually monkey games because the institutions know that these COT reports are coming out. So they're going to fuck around with the market a little bit to try and, paint the tape. If anything, here we are on Monday. So it makes complete sense that we really shouldn't. Number one, we should see mixed messages through today. And then number two, we really shouldn't be placing any big bets until that window is done.
Yeah, I'm looking at this daily chart here, Brian, and this massive potential bullish divergence is
it's trying, isn't it? And we got even a little mini bull div that's actually confirmed itself in there.
Yeah.
So the interesting thing is, when it comes to trading is, and we sort of did this, I think, on the Broiler Chicken show. Like, we have location now. We have the startings of divergence signs. So now really what we need is some sort of structure. Like I said, I really don't like the look of this V bottom. That's not the best structure to me.
Yeah, wouldn't it be nice if we just rolled into, we want that bottom right there, and
it would be sick, because if that does happen and they go down, do you see those candle body lows? That's really where you should be marking. Yeah, those two lows, right where your mouse is, right? Those candle body lows are going to be key. And if the market, if you zoom down back to like a 1-hour chart, if the market can actually go down to those candle body lows and reverse, this actually creates a harmonic pattern. Where's Steven? Steven would be like, "Whoa, man, look at that. That's a goddamn bet." Or whatever, right? So yeah, so and interesting. Look how that's really basically where the institutional fingerprint is right there, eh?
Yeah.
So if they could zip it down there, and we're all going to be like, oh fuck, here we go. But if they zip it down there and then they reverse and then they start to climb back up, this could be one hell of a harmonic pattern here. But that's days away. That's not today. We'll see what happens.
Yeah, we'll see.
Only time will tell, as they say, right?
Yes.
All right. What do you think,
All
guys?
right.
Do you have a pretty good picture of what Thomas and I are thinking about Bitcoin right now? I hope so. All right. What do we want to do next, sir? What time is it? Holy Jesus, that's almost an hour. Jesus, this time goes quick, eh?
So I just want to highlight, if somebody was interested in short-term trading this, that there might be a 30-minute setup here. Just look for any kind of M that comes in on the shorter time frame. This 30-minute trade already played out this morning. We've been bouncing along 38.2 across most of these ranges for the last the better part of the week, I'd say. We keep testing 38.2 and then bouncing higher. So this could be the completion of that move here, but just keep that in mind, that any pullbacks here are testing 38.2. So if you want to be playing to the short side, that's kind of what your target should be looking at. And any M's that set up, if they're setting up on the 38.2 level, you really have to wonder if we're going to end up busting this move higher. So I don't have a setup for you at this very moment, but right here, we can see this M setting up on the 38.2. And could we come back down into this area to set our 4-hour trade higher? I'd like to see that. And if this M does come in, I'm going to be risking to the 78.6, maybe even 70.2 area. The 8100 seems like a good number for me if the trade is to come in. We don't have any divergences working. The one that already came in played out. To me, this looks like a lot of sideways. So there's your short-term plays that aren't here, but that's what you can keep in mind moving forward until tomorrow.
Yeah, and for the record, guys, I'm just going to simply say I'm not the biggest fan of shorting in higher time frame long zones. I would much rather hunt longs, but that's just Brian.
Yeah, so that's a good disclaimer. Should we move to altcoins now?
Sure.
Altcoins, as we're calling them.
What are we calling them?
Shaltcoins.
Oh, instead of okay. Shaltcoins, all right. Shaltcoins tastes great. I was actually a bit surprised when I actually it sounds a lot better than shitcoins. I was actually a bit surprised this morning learning somebody had put out a pretty scathing report on Tether, and it's always fun to read those. I was actually a bit surprised at how deep Omni is in on the Tether story. That was news to me. I didn't realize that Omni was what they were basing it off of. And then I was also really interested to learn that the ERC20 tokens are also wrapped up in the Tether story as well. I thought that was really interesting spin too. So when I saw that, and this is just Brian's rhetoric, but when I saw that, that's, to me, that seemed like further anecdotal evidence that they're not going to let this Tether thing crap out. But who knows? We'll see. Only time will tell. The only altcoin that I saw that was really moving the market here this morning, I think, is this Ethereum Classic, and I really like the money flow here. And of course, they've got, I think, is it an airdrop or is it an actual fork? I can't remember the term. But if I understand correctly, they have a bit of a fundamental driver going forward. And if anything, guys, this is such a good testament to hunt those weekly W's, right? And this guy here, he didn't even give a shit about anything that happened in the broader market, right? It just didn't care. Didn't really mean anything to him. Bitcoin, who gives a fuck about Bitcoin? And if anything, this is just such a good testament. If you can find the assets that are sitting against their weekly W's, you can often ride out a lot of the shit going on in overvalued assets that are a million miles away from their latest W's. And this guy here, if anything, I think he's pointing much, much higher here. So, oh, I'm showing Thomas's chart, aren't I? Sorry. All right. So, what did you want to talk about Schalt coins?
Well, I saw something in the altcoin news space about Walton Chain. If anyone's familiar with that, they just released on Twitter that they're going to be working with a company called Friar. And let me see if I can.
That's this you were talking about?
Do you have the image? Yeah.
This is
So
a
at the
link that you
bottom.
had today.
Yeah. So in February, it says Walton Chain R&D collaboration with Friar at the bottom, Brian.
Mm-hmm.
So if anyone knows who they are, they're actually a really big name company that uh, they have a lot of clients. So they're a full service regulatory solutions and services company, and they're a specialist in providing regulatory consulting, operations, and technology services, where they deal in global health, authority dossier compilation, submission services, labeling and artwork services, regulatory software for bio and pharma. And the idea here is that they have a huge potential client base that they could be getting on board to essentially get on the blockchain. And the idea is that they have this kind of third silent chain that they're working to bring to market through Friar. And if I can get a list of some of the guys that are working for them, they have a lot of pharmaceuticals that are in the pharmaceutical companies where their contracts are worth billions of dollars. And I don't have to explain to everyone how much it would mean to get the pharmaceutical industry on the blockchain and have a token backed by them to share data and work together to get their R&D in line so that they don't have to worry about fulfilling the kind of 19-year patent cycle where everyone rushes to get a drug to market. And you have problems with things like, in the past we had problems with Vioxx where people were rushing to market too quickly, and they ended up having issues with not testing them properly. So if you can get all these companies on the blockchain, you would change the entire face of pharmaceuticals and even medicine as a whole. And the amount of money that's behind this whole industry is just staggering. And the fact that Walton Chain is partnering with this company that has their hands around all these different companies is just such big news. And whether or not they actually can get this chain working and solidify the partnership, that's another story. And I'm looking at the Walton Chain chart on the daily, and nothing's really moving there yet. But if this stuff actually were to come to light, I mean, this could be really big. So this isn't
is Friar here the crypto? Like who is Friar?
Friar's the consulting company. They're this company that has relationships with all different pharmaceutical companies to bring them software, to consult about different things within the industry, what they should be bringing to market. I don't know
is this the actual coin?
Yeah, so Walton Chain, the symbol is WTC. BTC is the name of the altcoin, and everyone was really excited about them when they first launched. I have a Binance chart on my screen. You can see that. And we're kind of working our way down lower. This one hasn't suffered as much as some of the other names had, where they've come down to 78.6 and 70.2. And I've seen some of the bigger names like Neo and OMG, not counting the Tether example, but most of these haven't gone as low as some of the other.
That's a total Kavarkinator, though. Can you see the Kavarkinator setup?
Yeah, so that's where I'm setting my entry at.
Yeah, man, I just go throw your bids in there at 9,000, right? And just be patient. What'd be really cool is I bet you if Joshua pulled this chart apart, I bet you he'd see a ton of gaps down here.
Yeah, so I'm arguing, Brian, that we won't go that low just because this is one of those bigger name coins that has a lot of support, a lot of money, and a lot of community acceptance that it's not a Schalt coin.
Yeah, all right. Well, I'm from Missouri.
I hear you. You like to get you like your stink bids, and there's nothing wrong with that. The little old
Yeah,
lady strategy
well,
works for a
I'm a
reason.
cheap ass by nature. That's the problem.
Yeah, so that's
Um,
one for your list if anyone's interested in that.
yeah, totally. And you know, the cool part, and thank you very much. Totally appreciate that. So let's see, just on my chart, if I just grabbed a couple gap levels. Oh, look at that. So the gaps that I just pulled off of the hourly chart, there's one at 9,300, and there's another one right off of this important low there. And I suppose, you know, if this thing does consolidate, and I suppose we got one low, two lows, three lows. If your indicators are starting to suggest a bull, I suppose you could bot this thing up here. But you know, I'm a cheap ass, kind of like here, right? I'll just work my bids against previous support levels and try and get in here. In fact, you know, I have no problem. I'm going to go throw a bid on this right now. Thank you for the idea, sir.
Sure, and Payman's actually saying that VEN is a competitor to Walton Chain and also looks really interesting. I haven't looked at that one yet.
Yeah, there it is. And what do you guys think? And Payman, I'd be really interested to hear from you too. Are you liking Binance these days? Is it acceptable? Did you guys did everybody feel calm about through that site down, and you're still feeling pretty optimistic about the place? Payman says, "I like Binance." Okay, that's good. Both are very
That
interesting.
get the owner of Binance was featured on the cover of Forbes as the zero to billionaire kind of overnight feature article, and they photoshopped his Binance logo off his sweatshirt on the cover of Forbes.
Well, and then does he go from billionaire back to zero just as quickly? That's always the question.
Well, hopefully not, because I think a lot of us have our coins on there. But I like the interface to some degree. To me, I can't stand the fact that you can't copy and paste your orders or your number, so you have to transcribe your zeros directly into the order, and it's a pain in the
Yeah,
ass.
their interface is a bit of a challenge, isn't it?
Yeah.
Yeah. Okay, so this is one to add bids on, and I'm sorry, I didn't get the symbol. What was the one that was the competitor?
VEN. V is in Virginia, E is in Edgar, N is in
All
Nancy.
right,
Yeah.
and versus Bitcoin, is that what we want to be looking at?
Yeah, sure.
All right, so oh boy, yeah, Jesus, these things are expensive, eh?
That looks it looks really similar to Walton Chain, doesn't it?
Yeah. So you know, huge amount of inertia. The only problem is check out the divergence here, though, eh? I mean, if anything, everybody who's you know, taken the school program and all level oneers who are going to take this modules coming up, really, really good anecdote of this concept of volume impetus, where you can just literally see the bulls are just slowly falling asleep. That's a bit dangerous. So cool your jets, work your bids. I don't think there's any hurry on either of these. Don't chase. Right? You're not allowed to chase. This is to me, this looks very nosebleedy. So you know, same thing we did there just a moment ago. Let's go pull up the chart. Can we find gaps? Where's Joshua going to be hunting? Anything? Well, this looks pretty clean actually. That's not bad. So you know, I think I'm ready to go and put a bid in on that other one. I don't know about this one though. So I'll have to take a look at it a little bit more. Okay, so that thank you very much for that idea. That's totally awesome, Thomas. I really like us, you know, just giving people ideas to chew on through the day. I don't necessarily mean you know, go out and just load up on it right away. If anything, work your bids and away you go. So. All right, anything else you want to take a look at while we have the good people here, Thomas, or shall we call it a day?
I think we got a good solid hour out of today's daily brief.
Sure looks like it. Yeah. I think. Is there any days that you know of over the coming week? And I'll check the schedule that you're going to be absent. Maybe what we'll do on those days is we'll attack your guys' ideas, because I don't want to keep you guys here forever. But I wouldn't mind at some point going through and just cleaning this up. But I'm just sort of talking out loud right now.
We can make
Okay.
some time this week to go through a little bit of that if you'd like.
Yeah, well, I mean, it can't hurt. I think we're on a really good path here, and I really appreciate your content addition. I think this would be really, really good value for everybody. I think we've done a pretty good job here today. So, what do you think? Shall we call it a day?
Yeah, I'm good.
Okay.
I think everyone else likes what we're doing.
Okay, guys, you have yourselves an awesome rest of your day. I will be in and out. We have class this afternoon. It's I see a lot of don't chase, work your bids. Here's another one that's beautiful structure. Work your orders at your levels. Let the market come back to you. There's really no hurry just yet. Let's just keep on keeping on doing our thing. All right, guys, have yourselves a great rest of your day. All the best. We will see the level oneers later on this afternoon, the North Americans, and I will see you, Mr. Thomas, first thing tomorrow morning. And other than that, I think the only thing left to say is bye for now.